Welcome to Crypto Plus, where we bring you the latest information on cryptos, blockchains, finance and futuristic investment vehicles. Today is Wednesday the 8th of September 2021, and we wish to highlight some of the actions that the SEC is taking, threatens to take, and has taken against companies, organizations and individuals in the cryptocurrency space. Now, yesterday we published a video entitled El Salvador launches Bitcoin as legal tender today, and we've placed a link below. On that day, in which the Bitcoin price and the prices of the vast majority of cryptocurrencies fell anywhere from 10 to 30%. Yes, 10 to 30% in a day. A number of those in the YouTube space are calling foul play and manipulation by central banks, including the World Bank and the IMF, both of whom have expressed their views and displeasure of El Salvador adopting Bitcoin as legal tender. But that aside, there is a more perhaps sinister and pervasive move being made by regulators, and especially the SEC, to do all that it can at least to regulate the crypto marketplace and prevent this area from moving directly and competing with those involved in DeFi and traditional banking services. So let's take a brief look at some of the actions taken and threatened. But before we do, one of the biggest and most profound cases currently underway is the SEC's action against Ripple, accusing it of offering a security while unregulated, which is currently being defended in court, and we're expecting to hear the outcome within the next 3 months. But let's take a look at some of the other threats and actions. Article published on Euronews.next today, US SEC threatens to sue Coinbase crypto exchange over cryptocurrency lending program. Let's have a look at what this says because it's quite interesting. The US Securities and Exchange Commission has threatened to sue Coinbase if the crypto exchange goes ahead with plans to launch a program allowing users to earn interest by lending crypto assets, the company said on Wednesday. The SEC, which regulates financial institutions in the United States, has issued Coinbase with a Wells notice, the official way it tells the company that it intends to sue it in court, said Coinbase's chief legal officer Paul Grewal in a blog post. Grewal said Coinbase would delay the launch of its Lend product until at least October as a result. Earlier this year, SEC Chair Gary Gensler called for tighter regulation of cryptocurrency exchanges. This is quite a volatile, one might say highly volatile, asset class, and the investing public would benefit from more investor protection on the crypto exchanges, Gensler said in remarks at the Financial Industry Regulatory Authority, FINRA's annual conference. Cryptocurrency lending gains popularity, though. Programs that allow owners of cryptocurrencies to lend these in return for interest are becoming more common around the world, but some regulators, particularly in the US, have started to raise concerns, arguing that such products should comply with existing securities laws. The US state of New Jersey ordered the cryptocurrency platform BlockFi Inc. in July to stop offering interest-bearing accounts that have raised $14.7 billion from investors. Grewal said in his blog that the SEC's concerns about Coinbase's Lend were related to the fact that the regulator believed the product involved a security. Grewal said Coinbase felt this was not the case. The SEC did not respond to a Reuters request for comment outside office hours. US Securities and Exchange Commission press release. SEC charges global crypto lending platform and top executives in $2 billion fraud. The Securities and Exchange Commission announced today that it has filed an action against BitConnect, an online crypto lending platform, its founder Satish Kumbhani, and its top US promoter and his affiliated company, alleging that they defrauded retail investors out of $2 billion through a global fraudulent and unregistered offering of investments into a program involving digital assets. According to the SEC's complaint filed in the United States District Court for the Southern District of New York from early 2017 through January 18, defendants conducted a fraudulent and unregistered offering and sale of securities in the form of investments in a lending program offered by BitConnect. The complaint alleges that to induce investors to deposit funds into the purported lending program, defendants falsely represented, among other things, that BitConnect would deploy its purportedly proprietary volatility software trading bot that, using investors' deposits, would generate exorbitantly high returns. Let's take a look at cyber enforcement actions by the US Securities and Exchange Commission. 1st of September 2021, as mentioned, the Securities and Exchange Commission filed an action against BitConnect. 9th of August 2021, the SEC filed settled charges against Poloniex LLC, under which Poloniex agreed to pay more than $10 million for operating an unregistered online digital asset exchange in connection with its operation of a trading platform that facilitated buying and selling of digital asset securities. 6th of August, they charged 2 Florida men and their Cayman Islands company for unregistered sales of more than $30 million worth of securities using smart contracts and so-called decentralized finance technology. 4th of August, filed settled charges against Ulala and 2 of its California-based founders for allegedly defrauding more than 1,000 investors in an unregistered offering of digital asset securities that raised more than $9 million against Ulala. 14th of July, filed settled charges against the operator of CoinSchedule.com, a once popular website that profiled offerings of digital asset securities. 22nd of June, settled charges against Loki and its CEO John Wise for making materially false and misleading statements in connection with an unregistered offer and sale of digital asset securities. And it goes on, week after week, month after month. We can see where the focus actually is, as far as the SEC is concerned, all to do with digital asset securities. Well, and this represents only a small proportion of what is happening both in the United States and around the world. Yes, of course, we need a degree of investor protection, for sure. But we have to ask, is this the motive behind a number of aggressive moves, especially when many have previously accused the SEC of doing very little against those involved in scams in the equity markets or the banking industry as a whole? These are answers we cannot truly give without first-hand knowledge of experience in them, but prima facie questions do need to be asked about both motive and intention. We all know that the current financial system is close to the precipice, and that at some stage something needs to replace it. It may be cryptocurrencies, but there again, it may not be. But at least until either a person, a company, an organization, or a movement attempts to improve the financial lot of the people as a whole, we all know where destiny will lead us if that attempt is never made and not succeeded upon. What do you think? Do you think the SEC is politically motivated to drive out cryptocurrencies and prevent their further advancement? Do you feel that central banks and governments are frightened of this crypto space because they cannot regulate it properly? Because they don't understand it, for one? And secondly, their concerns about money laundering, are they legit? When cash is laundered far more heavily than visible blockchain transactions, available to all, or at least all who understand them? Or are they just frightened about cryptocurrencies undermining each country's own currency? Do share your thoughts. Be interested to hear. Thank you for listening. Please give us a thumbs up If you haven't subscribed, please do so. Press the bell sign. Have a great day.